Thanks for joining us for today's Northern Ag TV. Well, 2026 is officially upon us, and the cattle futures wasted no time climbing higher. They took that momentum from the impressive year we saw in 2025 and just carried it right over. Now, to end the year, we did see impressive gains on the board. Feeder cattle contracts up $25 to $30 in the month of December. Live cattle contracts up $12 to $15. To end last week, contracts took off following the increase in the cash cattle activity. Live bids came in $228 to $232, steady to $2 higher, and dress bids at $360, $4 higher than the previous week. January feeders finished the week out up $585 at $356.10. The March contract up $762 at $352.95. February live cattle, they climbed $4.40 up to $236, with April at $235.97 up $377. Now, the weakness in the markets is coming on the demand side. Box beef prices usually see a little holiday rally. However, that was not the case this year, and now the continued downward trend is leading to concern that this could be consumers finally showing some resistance for beef prices. So definitely something to keep an eye on here in the upcoming weeks. Now, as we look at some of the local auction markets and prices, 2025 was probably the best year to sell cattle that we've ever seen. Kurt Angus with the American Angus Association shared the fall production sale reports for the year. Commercial bred heifers, they averaged $4,400, selling over 6,000 head in the region. Young bred cows sold for an average of $4,660. That's up 32% from last year. Bulls sold for an average of $11,265. That's up 24%. Bred cows at Faith Livestock to end the year. 3 to 5 year old bred cows sold from $4,250 to $4,300. 3 to 6 year olds topped $3,600, and bred heifers sold strong from $5,150 to $5,850. Stay with us for a look at the grain markets after a word from our TV sponsor.
From the beginning, we've worked closely with farmers. BNSF's ties to the agricultural community go back 175 years. Together, we've innovated to make the U.S. agriculture supply chain one of the most efficient and productive in the world. Our strong relationship powers BNSF still today and helps us move the nation like no one else can. At BNSF, we move the nation for you.
Now, the grain markets unfortunately did not have the 2025 year that we saw in the cattle markets. Of course, we saw rising input costs and low commodity prices really weighing in on producers. However, 2025 did end on somewhat of a positive note. The USDA did release the commodity payment rates for the Farmer Bridge Assistance Program to end 2025. Over $12 billion will be paid to American farmers here in 2026. Some of the payment rates from our region include barley at $20 an acre, canola $23.57, corn was at $44, sorghum $48, and wheat prices $39.35 an acre. The markets did not end 2025 with any momentum, as the end of the year typically brings quiet news, but we are seeing a lot of focus on export paces for 2026. Of course, corn markets did have a strong pace in 25 with a record-setting year in production. This will likely carry over. Soybeans, however, they did not have the same story. Export pace fell over 30% behind 2024's levels, and of course, continued trade discussions with China and other major exporters will be key for soy exports this year. Wrapping up with the wheat markets, a lot of outside pressure the past week with turmoil over in the Black Sea region. As for short-term fundamentals, winter kill not a major concern right now in the U.S. with above normal temperatures, but we've seen in the forecast for early February it does show some drastic cold temperatures in our region up ahead, so definitely something to keep an eye on. KC winter wheat in March finished Friday at $5.15. That's up a quarter cent. March Minneapolis spring wheat contracts, they fell 3 pennies down to $5.70. With our Northern Ag TV, I'm Colton Young. Have a good one.